Throughout history, gold and real estate have been two most reliable investments. Landlords were always the elites of the society, and owning the piece of the real estate was like the dream for the most people. Even today, prices have risen so much that the owning a home seems unreal. However, in the last few centuries, the financial system has developed so much that it presents an alternative way to grow wealth. Warren Buffett is a living proof that with the smart long-term investments in the stock market, you can do pretty good. Here in this video we will explore which one is the better investments. Is real estate is still the great investments as it was in the past, or the stocks market is the better alternative in the 21st century? Real estate versus stock market. There is a lot of the debate about it. Real estate investors claim that the real estate is the best investments ever, but stocks market guys claim the opposite. Both of them are right to the certain degree. The truth is somewhere in the middle, as always. But to find out where exactly we have to take a deep look into each of them. Let's start with the fact that the real estate is expensive no matter where you are. People often work the entire life just to own one property. That was the case with your parents probably. To make the single real estate investments, you need a lot of the savings. On the other hand, you can start investing in the stock market with the little as $5. Of course, it depends on the stocks, but most companies, even great companies such as Apple, the target is around $300 per share. You can become the investors in one of the largest companies in the world just by a few $100. But the cost doesn't stop there. It's no longer like the old days where you have to pay a broker. With apps like Robinhood, you can purchase stocks for absolutely free. But when it comes to the real estate, the transactions fee is quite expensive. That doesn't necessarily mean that the stock market is better. Risks that comes with the stocks market are much higher. It's difficult to analyze the market and the individual stocks in the particular. We might be at the peak of the expansions period where the entire market is overvalued and your investments will probably fall by the 20 to 30 or 40% if you don't cash out right before the market crash. If anything, historically taught us that nothing is too big to fail. For instance, Apple is the huge company, so was Nokia once upon a time. In fact, Apple was already once on the brink of bankruptcy. Stock price changed every day for a different reason. That can trigger the emotional response and push you to exit the market at a loss, which is what happened quite often, even with the professional investors. But with the real estate, it isn't like that. As long as it's the city, the land behind it will always be valuable. And even during a crisis, they often restore their value pretty quickly, since everyone needs a roof over their heads. Real estate covers one of the most important needs. When you buy the property, you can sleep well and be confident that you are not going to wake up the next morning with the news that your property lost half of its value. What also makes real estate attractive is that it provides passive incomes. With rent prices going up, you don't even need to work. It's one of the few investments that can provide you with the strong, stable income that has a dividend yield of 7, 8, or even 10%. Whereas it's extremely rare for any company to pay dividends yield of 5% or more. Some companies pay, of course, but they are risky stocks where you might lose much more by the drop of the prices that you can possibly make out of the dividends. But it also works the other way around. Real estate doesn't appreciate as much as the stock market. In the 2019, on average, home prices appreciated by 3.8%, while the S&P 500 was up to 28%, which is almost 10 times more. In the past decades, Amazon had a total rate of return of 1,200%, or Netflix had 3 times the number, 3,700%. You will never find such returns in the real estate wood because In the stocks market, companies constantly involved in the stay ahead of everyone else. In 25 years, Amazon grew from the nothing to over the $1 trillion company. However, the business's world is ruthless. Today, you're the top. Tomorrow, your competitions will take you down. It is like the real estate's what sits in the corner and keep getting your monthly passive income. When it comes to taxes, there are the two approaches. The stock's price can go and to 1,000%, but you are the only getting wealthier on the paper. If you want to materialize that wealth, you need to sell the stocks where you have to pay the capital gain tax, which is 20% for the long-term investments and can go high as 37% for the short-term trade. With the real estate, there are the multiple ways to avoid taxes and use the cash to grow your wealth. For instance, instead of paying the entire property upfront, you can deduct the portions of your mortgage attributed to the interest payment of your tax return. You can recover the cost of the income production's rental property throughout depreciations. Depreciation's expenses often results in the net losses on investments property. Even if the property actually produced positive cash flow, these losses are as well as the expenses such as auto utilities and insurance deduct from the ordinary incomes. Even if you end up selling the house, you can avoid paying the capital giant tax if you purchase another property. Tax benefits are quite decent in the real estate, but of course it's not as sunshine and rainbows. Unlike stocks, where you can read the financial statements of the company, do some research about the company, and to decide where it worth your money or not, real estate requires much more work. To find one property, rental property, you might need weeks in if not months. That's just a part of it. Once you start renting it out, you will come across a whole different type of the challenges, such as the finding the decent tenants who can keep paying the rent and would take care of the house. The house constantly needs some maintenance, something always breaks and needs to be replaced. All that is going to occur additional costs and expenses. That also means it might be difficult for you to move to a different city or to the country because your property might need to there all the time. However, investing in the stocks market doesn't have all those headaches. You can be whatever you want. You can simply follow the news and the performance of your portfolio from your comfort of your smartphone. Second, stock market and risk opportunities. What I like about the stock market is that it can teach you more about the business's work than your 4-year bachelor degree would ever do. Every time you analyze the company before throwing your green dollars into it, you have to read its financial statements, understand its cash flow, study its past to have better clarity about its future decisions, get to know better its products and their sales. On the top of On top of that, you have to understand deeply how economic machines works. The role of the banks is in the economic cycles and so on. So if you ever want to start a businesses, that knowledge will be the backbone of your startups. But the stocks market isn't just about buying and selling stocks. The financial systems is so complex that there are more ways to make money in the stocks market than most people know, such as shorting, where you sell the stocks when it's high and buy it back when it's low. Sounds complicated? Well, I have explained that in one of the previous video. And then you have futures options. You can earn money by predicting the future price of the crude oil. We can't discuss all of that in this video, but you get the pictures. If you master the stocks market, the door of the opportunities will be opened in front of you. Even if you don't have the time to do all of that you can keep your savings in an index funds and be confident that in the long run you can expect 10% return. Third, leverage. When you buy stocks, it's just digital documents on the screen of your smartphone. You almost have no control over it, since your single stocks isn't going to give you much influence when the company has another 5 billion stocks. Whereas real estates give you complete control over your investments. You can touch it, feel and control it. Besides the passive incomes it can provide, as we have discussed earlier, you can use leverage. Let's say you have $25,000, put in $25,000 into the securities buys $25,000 in value. Conversely, the same investments in the real estates could buy $125,000 in property with the mortgage and tax deductible invests. Where should you invest? So, where should you invest? The answer is it depends. If you are keen to the passive incomes, then real estate is your choice. However, if you want to aim the higher returns, the stocks market is undoubtedly is the better options, especially if you are the mature investors with the little money to start. But you should also take into the account is what you find interesting. If you find it's too boring analyzing companies and going through endless paperwork, when maybe it's just not for you. Factors such as the place you live also plays a role. Maybe in your city or even the country things are different, so you have to draw your own conclusion based on your circumstances. That's it all this video. If you want to support the channel, check out our Patreon. Other than that, just give this video the thumbs up and subscribe if you are new around here. Thanks for watching, and until next time.